Are we
Yeah, we're ready to go. Thank you so much, Simone,
right?
for joining us today. I'm really excited to have you present to us about your work with Ponterra and your work on restoration projects that are helping to reverse climate change, halt biodiversity loss. We'll get to a chance to talk to you more about um, carbon sequestration and all the work that you're doing around carbon credits. It's a very fascinating industry. It's one that we want to learn more about in our impact investing fellowship. So I'll let you start the conversation and we can start asking you questions and investigating with you.
Perfect. Yeah, exactly. Let's make sure to do a dynamic. Well, thank you very much for inviting me. It's a pleasure. Again, I told you this before, so if after this after this call or whatever, there's still questions, people that are interested. You normally say this at the end. I'm going to say it in the beginning just to make sure that everyone is like, okay, I lost on that part, whatever. You can always do a follow up. I'm happy to chat after that. But anyways, very nice to meet you, everyone that's on the call, and potentially everyone that sees the recording after. If there's anyone else, my name is Simon. I am one of the founders of Ponterra, a project developer in nature restoration projects. Yes, I see that's you send the link to our website. Our website is currently being rebuilt, so you'll see you won't get much without with that link right now. So it's very limited, but we're launching, I think, the new website in like 2 or 3 weeks. Again, a more insightful view there. But anyways, going back, so yes, one of the founders here at Ponterra, basically, and a bit of my personal journey to explain how I got here. I started my career in finance. I was in investment banking in the M&A and special situations group at some point at Morgan Stanley in London. So I worked throughout. I also did a bit of capital markets, but mostly M&A. So a lot on the financing side of things. After that, I launched a different venture. We were basically an intermediary between investors or capital deployers in and restoration projects. So projects that had at some point an intention to reverse or restore nature or reverse climate change in a way. So impact and nature driven projects. This span from like we did a few projects in transitions towards regenerative agriculture, others in biodiversity conservation. But basically, this first company that I was founder of, we were purely the intermediary, right? So we created the financing vehicle for an asset manager to deploy capital into these projects. Because one of the challenges, and this probably is interesting to this group, is that there's certain very financial oriented challenges which come from the nature of the asset class, which is the lack of liquidity of these investments, the long-term horizons, lack of liquidity meaning, well, of course, like it's hard to trade as an asset compared to if you would say a commodity. The long-term horizons. If you're speaking of regenerative agriculture, a transition for it to yield the return might take between a decade and 2 decades. So it's long-term horizons. Anyways, we were the intermediary for this. So we built the SPVs. What I soon realized while doing that is that the biggest need in the market was actually project development. So it was good to be an intermediary, but it had way more impact if I actually was building projects because I was finding it hard as an intermediary to find these high quality projects. So the long and the short of it is that after a few sort of rounds and meeting some interesting people in another company that I worked in, is we came together, a group of 4 individuals, to launch a project developer. So basically someone that is actually leading and making these projects, operating them on the ground. And this is effectively what we do at Ponterra. So our first project, give me a second because I can't see all of you guys. Okay, well, good. Some of you don't have a camera, but anyways, I like to see as many faces as possible. So yeah, basically what we decided is that we were going to launch and fully focus on one first project. It's a 10,000 hectare restoration project. We're doing reforestation through native tree species, which is very important part of the design of the project, meaning we're not doing monocultures in one single plant just in a row, but to date, we've planted 106 different native species. So big emphasis on biodiversity as a co-benefit of the project. The focus of the project and the focus of the company as a whole is targeting a very specific type of land. So we target degraded agricultural lands throughout the world, starting with this one. And our operations are as follows. We basically partner with a smallholder farmer that has been degrading their lands throughout the last years, which is not to blame on them, but it's a general trend in general. We see this in tons of places where a combination of climate change and just man-made degradation, which in the specifics of this project come mostly by chopping down the trees, burning the lands, and fumigating them for cattle ranching, because of like the long-held vision that if there's a tree in a property, a cow won't be able to live. So they basically chop down the trees so that cows can live. We soon realized that the only thing that comes with it is that you degrade more the land, less soil nutrients. Eventually, the land looks like a desert. So this is basically the area that we're focusing on here. So basically, we work with these smallholder farmers, co-create a project with them, never acquiring the land. Another key component of our project. So we rent the land from them and design a project where we are mutually beneficial for it. Remove the activity that is going on right now, which for them, all of it is cattle ranching, very, very low intensity cattle ranching, but it's nevertheless cattle. We take the cows out basically, and then restore the native biodiversity of what used to be there. How we do this is by issuing a carbon credit. So given our project design, we can claim a carbon credit. We do this through Verra. We're registered. So it's a Verra registered project for ARR, which is afforestation, revegetation, and reforestation. Issue a credit that, long and the short of it, is that it's profitable. So the costs of operating and developing this project are lower than what I can sell this credit for. And then we share part of this profits with a smallholder farmer, which in some cases go from making $50 per hectare with their cows to like 350 with the carbon project. So economically, it also works, which is, I guess, something very interesting for this group. So I'll pause there. In terms of like the project design, what we are as a company, if there's any questions. If not, just so you know, in case you were going to ask something like this, of how we actually sell the credits or a bit more into the intricacies of the financing, I'll get into that in a minute. So yeah, Leah. Sorry, I don't know how you pronounce it. Leah?
Oh, no. Leah, yes. But yeah, thanks so much
Okay,
for
great.
taking the time with us. This is really interesting. My question was more about, so like the finance background you described, sort of obvious kind of how you got comfortable kind of moving into the intermediary space. And then more interested in like, how did you get the expertise to kind of go into the actual development space and be able to target kind of how you actually effectively manage these types of lands?
Very good question and very easy to answer. I don't know yet. I mean, I still don't know about this. I just acknowledge that right now I'm in the project. I'm based here. My role within the company is not entirely financing, but I continue to do what I learn how to do, which is I still interact with investors. Right now within the company, I'm positioned a bit like a bridge. So I understand the operations of what's going on the ground, while, very good point, acknowledging that I'm not the leader here. So I do not do the planting design. We have a team of 27 people right here on the ground. We have our lead forester. We have a lead for the biodiversity and the science mechanisms behind it. We have a full operations team, another one directly related to landowner engagement. So the long and the short of it is I'm never going to be the person that really understands the farmer, just like our landowner engagement team does. I will certainly not be the one that knows exactly what type of trees we need to plant. That's our forestry team. What I am is trying to be as comfortable as possible understanding the operations of the ground so that then I can go and cover it. I live in London. That's where some of our investors are, some of our credit buyers are. Translate this. So I'm not purely within the investor relations team and the company as a whole, but a bit of like in between, a bridge. But very good point. The key to this is acknowledging, amongst other things, that some of the people that know more actually are the people on the front lines. So the farmers themselves, they know which trees they chop down. So it's a very good indicator of what used to be there. And so yeah, but I think building a company like this is one of the key points is saying that we need a lot of different expertise, a lot of different backgrounds. A company as a whole, we have people in tech that are sitting in tech-driven places. We have operations team that are here on the ground, finance. So it's a bit of everything. But yeah. And then like last part to the answer, we are 4 co-founders in this venture. I came with a finance, more of like an entrepreneurial background. I'd say, I don't really like the word, but I've done companies before, so I understand that. Then we have one of our founders has been an operator and developer of projects like this, mostly on the NGO space and for public institutions for like 17 years. So a lot of experience there. But yeah, good question. Kaja.
Hi, first of all, thanks for taking the time to talking to us. It's very interesting. My question would be twofold. First of all, I would like to know how's the demand side for carbon credits? Like, is there sufficient demand for the project to be sustainable, or do you just think there will be more demand? And the second question would be like how resilient your calculations are to changes in prices for carbon credits, because I'm not 100% sure, but if I remember correctly from an environmental economics lecture I had, that the prices for in the European emission trading system are sometimes too low to be really efficient. So I was wondering, like, with which carbon prices you're calculating.
Yeah. So on the first part of it, I might actually give you a preview of how we're financing the project, which is what I was going to do now, because this is sort of the best way to understand. Basically, what we're doing with this is we pre-sell and receive upfront financing for around 60% of the credits. So this is a 30-year crediting project that is basically going over 100 years. So you register it for 100 years. But the initial crediting period that we're doing is 30 years. So what this upfront funding means is that we do a pre-sale of the credits. We have a carbon curve that we expect, and then we go out to buyers and say, if you give us the money now as a pre-sale, we'll sell you this credit at a discount based to our carbon curve. So similar to what you see in other industries, like the real estate industry, it's not very different. We have a building, we say, or a building. We expect to have a building, and then we say, we'll sell you apartment 2 and 3 at a discount to this. This way I can fund basically building the project. And then apartment 5 and 6 I retain, and that's what I sell at a bigger margin up in the future. So part of the credits are sold in advance with the payment received upfront. This is what we've been negotiating for the past, say, 11 months, I think, with a few buyers. The profile of these buyers tends to be like the two bigger, like across the spectrum, there's like two big buyers. One would be the purely the corporate buyer, effectively, someone that is interested in buying these credits and retiring them. You can think of like, I don't know, any large corporate that has 20, 30 net zero goals and that they need to offset their emissions in order to balance what they can't reduce. That's the first buyer. Basically, what they're interested in is buying a high quality credit and knowing that if they have to pay it upfront for a credit that's in 2030, it's not their business model, but they just need a high quality credit. The other side of the spectrum has a financial buyer, so a fund that tons of them are starting to, some of the biggest names in the private equity industry already have their funds dedicated to this, which is basically buying a carbon credit today at a cheaper price and then reselling it in the future. So we are getting funding. We are about to announce, hopefully, the close of the financing for this first project. And we've pre-sold almost 100% of the credits, basically for the next 30 years. So in terms of the certainty that you're speaking of, I'm a big believer that this industry will tend again to, similar to what the renewable energy space has seen in the past, which for a project, renewable energy project, you have, okay, I'm going to build a solar plant. What do? I normally go out to a buyer and I say, I'm going to sell you all the electricity from this project. And then with that, you have a guarantee that someone's going to buy it. And then you go out and seek finance. Here, I basically exposed the three types of agents in a project. You have the developer and operator, me. The second one is the person that actually is interested in the electricity, which in this case for us would be the corporate, the one that wants to retain the credits. And then you have the financier. So it's the person that says, okay, I don't really want that credit. I'm financially oriented. It could be a bank just giving you a loan. And then against that promise, I will give the project developer a loan. So my opinion is that the industry will tend towards this. The reality is nowadays they're a bit mixed because the financier is not as developed. And then what we get is that some of the corporates that want that high quality credit end up giving you the upfront funding as a part of their strategy. So they say, okay, I want this credit. My business model is not to give you the money now, but in order to ensure that I have a good credit in 2040, I'll pay it upfront today. So this is what we're getting. And then to the second part of the question, which will definitely be briefer answer. The reality is that since we've locked in most of these pre-sales, we have very low exposure to carbon pricing. So it's the financiers in our project that are getting the exposure. Basically, they buy a credit today at a price, and then their carbon curve expects that when the credit is actually issued, they will be able to go to market. They have the right to that credit and sell it for like 3 times what they're buying today.
Yeah, and just as a clarifying there thing, Simón, this carbon curve, you could tell a little bit more on what that is specifically, because I feel like there's some in the room who would be wouldn't know exactly that terminology. And then the expectation also in the market is that carbon prices will increase with regulation and with development within the carbon markets, right?
Yeah. So sure. Let me take a step back then. There's a key part here. Like if we are selling voluntary carbon credits. So within the carbon market, within the carbon credit space, you have 2 big blocks. One is like everything related to mandatory carbon credit emissions. There's the cap and trade system, the European ETS, which is basically companies like they have a maximum that they can pollute, and then they can trade certificates between them if they reach that point or the other one doesn't. What we trade, that's a very complicated thing. What we trade is in the voluntary space. Voluntary space is again like a company, whatever you say, you name it. I have a Mac, so Apple has a 2030 net zero goal, right? No one is forcing Apple to have a 2030 net zero goal for now. Everyone expects this to be mandatory quite quick, and that's why they are taking action on. In other words, what before used to be seen as just a, social responsibility thing, now they have proper investment teams within these firms. Meaning like they don't see it as a marketing effect, but it's something that eventually will be mandatory. So what we sell is carbon credits that or carbon offsets to these companies that are doing it right now on a voluntary basis, or to the funds that again like expect to sell this credit in the future, also on a voluntary basis. When I speak about carbon prices and the carbon price curve, again, since it's a voluntary market, the variability between one credit and the other is immense. As in, you might have a conservation project, which is basically we do restoration, or removals, what you call removals. Some people do conservation. The difference is I plant a tree, and that's how I issue a credit, because if it wasn't for me, that tree wouldn't be there, so I can issue a credit. Conservation is I'm not going to chop down that tree, right? So that's how you get the credit, because that tree was threatened, then I don't chop it down and I claim a credit. The prices between these two broad areas within the nature space vary widely. So I'd say the average for a conservation credit right now is like around maybe $5 per credit, between 5 and 10, varies a lot. For the removal part, they're a bit higher. Maybe you could say 15. I can't give you a specific numbers of like what we've signed, but it's more than 5 times that. So what I mean is that there's a lot of variability. Our project has a lot of positive impact on biodiversity, has a lot of impact on community benefits. So it's it's going to be one of the most expensive projects sold to date on a per credit basis. So it just depends. Like if you want a higher quality credit within this voluntary space, you might be paying $70 per credit, and some others like it's 6, 7. So that's what I mean. And the carbon curve will be effectively what someone is buying. I'm literally making these numbers up, but someone is buying from me at 20, and their internal carbon curve is like just like a private equity, right? I buy this company at $100. I expect to change the management, do this, do that, and I can sell it at 200. It's literally the same business model. So they just buy a credit from us. We think it's high quality. They will retain it, and then someone will go on. Yeah, hopefully I was clear.
Yeah, thank you. That's a really great background. Katja, do you have any further questions?
No, thanks. All my questions are answered. I just forgot to put down my hand.
All right, who's next? Stephen, maybe you wanna moderate.
Yeah, Beth has her hand up first, and then Tracy has a question. So we can go in that order. And then I have a question to throw in. But for others who are on the call, feel free to put them in the chat or raise your hand and have a conversation with Simone on this.
Yes. Hi, Simone, and I apologize for not using my video. I'm having an internet issue today. Anyway, thank you for the great work you're doing. This is super interesting. I have a few questions because I run an accelerator for clean tech startups. And what I'm wondering is, one question is whether you have a set way of calculating and perhaps certifying the amount of carbon sequestration and what the value is for each of the projects. Like, is any certifying that? How does that work exactly? So that's one question.
Good question. So I'm not the expert in this part, but basically you have a whole monitoring plan for a project like this, which varies year to year. In the first years, it's a very manual process where you literally record geospatially every tree that was planted, the species and the growth rates. With that, also on top of what basically is the baseline for that property, meaning what used to be there before, you do a calculation and you calculate the additionality of everything that you planted. So baseline would be what used to be there and what would have been there wasn't it for your action. So that's something important as well. If it's an area that will naturally regenerate, then it's things that you calculate. And then basically what you monitor is everything that your actions happen. So first years, again, very manual. You do a recording of every tree and how that evolves. Then you move together with geospatial analysis done through drones. And then progressively you move, when the trees are bigger, it's way easier to monitor it from the top. So that's how eventually you do that. With all this monitoring, what happens is that a certifier, so Vera in this case, our registry, and an independent auditor come and check all of these things against their standards and then give you the actual credit that you can issue.
So is there some kind of international standard for auditing that?
Vera, VERRA is the registry.
How do you spell it?
VERRA.
Vera. Okay.
There you go.
Okay, thank you. Also, I was going to ask you, this is more kind of coming back to the work that I do. I wonder if there are any innovators who are potentially creating solutions that could be integrated with the work that you're doing. And or if you know any who are just starting out, who might be interested in working to accelerate their startups so that they'd be ready to work with you.
Yeah,
Or if you have any kind of network like that.
Yeah, certainly you can reach out to me after, and I'll have a think on that. There is tons of people. I don't want to sound biased, but I'd say that the thing that is less common is actually project developers, so people that are on the ground doing these projects. Then, like companies that are trying to build a solution to accelerate these, be it analysis tools, marketplaces, anything tech related that can be done from an office. There's tons of solutions that are out there, and some of them very, very good. But yeah, I do have a network of the people working a lot on MRV, which is what you were asking, measurement, reporting, and verification. Tons of people building like the data layers to analyze.
So the reason why I ask is that we're especially interested in technology solutions that are helping with carbon sequestration, CCUS, because we have a sponsor for, especially for this year and for the last couple of years, for a startup can win a $10,000 prize for a solution that wins for the companies that goes through our program. So in that space. Okay, last question that comes to mind now is to understand the funding model of this. Am I correct in my assumption that the funders and the people who are paying for your work are mostly philanthropists? And if you could explain that value proposition, that would be helpful. I'd like to understand that better.
Yeah, sure. So no, we don't engage with philanthropy. We don't engage with public funds. We're only privately funded, and it's through the mechanism that I told you. Basically, I'm making a building, and getting upfront funding from the people that are going to buy my apartments. So I get funding from my clients. We pre-sold this project again to close to 100% of the credits have been pre-sold. And how we're funding this is we are raising so we get around $30 million in upfront funding, which is a portion of the total revenue for sale. So basically I say, okay, I'm going to issue a credit in 2040, pay it to me now, and then I'll deliver it in 2040, but I'll give you a better price than what you'll get in 2040. That's how I fund my project. So it is a good point. 99% of the projects to date have been funded through philanthropy. The key point of what we do here at Ponterra is that we're a commercial developer. So we acknowledge that similar to what happens with what happened to the renewable space and energy space is that unless there's private capital in this, we won't accelerate it to the levels that we need. So we work with private capital. Our clients are corporations that want to offset their emissions or investment funds that expect to make a return. And that's
So how can somebody make a return? I need to understand
buying the credit cheap and selling it expensive. So if I'm selling to you a credit issue,
it's like a broker kind of thing. So they're buying and selling the credits.
Correct.
Okay, got it. Thank you for that. Yeah, it's always challenging when people come to us and say, okay, I have a new business with carbon credits, and there's a fair amount of skepticism out there about what's really a good one, and how do you differentiate
between project to project?
All these other places that are saying we can give you carbon credits, how is yours? What's the big difference, do you think?
Well, I don't know exactly what type of entity you'd be referring to, but I'd say the majority of people trying to sell a credit out there is an intermediary, a marketplace that says, I'll find you a credit. The difference, we are building a project that issues the credits. We don't even go through a marketplace. So we've pre-sold, again, 100% of almost 100% of our credits to 3 different entities only. So it's not like and this is multi-million dollar contracts. So we sell directly to the corporate. In terms of what makes us different from another project developer or another, to use the analogy, it's like why would you buy this apartment and not that apartment? Well, one of the key things is what I started with, which is the co-benefits of this project. So our strong emphasis on biodiversity and the community benefits. So again, we don't buy these lands. We work with the farmers. Farmers go up and make up a huge return on being with us on the project. So we work together with them, create around 300 local jobs only within this area. Tons of them actually come from women, because we have different programs for different people to participate in the project. One of them is a micro producer community, we call it community nurseries, basically people that produce saplings, small trees for us, and then we buy that. This is something that a lot of women tend to be doing, so we contract with them directly, so promote financial independence for women around the area as well, on top of the people that we employ for the planting itself. So all of these things is what you bake into what you call a high quality credit. Again, if you take into account that it's a voluntary industry, the high quality element is a very important piece for these buyers. And these buyers are, the corporate buyers are like an S&P 500 company, large tech giants, that it's very important for them, like what's behind this credit that we're going to spend such a big amount. That's the differentiation. When the market is regulated, things might change. It will just be like the long and the short of it is that probably like 90% of projects just won't pass the bar. So there's the registry that you just saw, which is what we're issuing through Vera. They issued a new methodology, so like a new standard. From now on, every reforestation project has to prove this, and that. This changed in October. We were filing with the previous one before. With this change, even us, which again, I'm a bit biased, but I'd say we're the highest quality project out there right now in terms of co-benefits. We had a hard time in some of these things. So what I can tell you is like going forward, like it's the markets have become way more strict in this case, because there's been a lot of flops as well in the past with carbon, with just the nature markets, someone saying, you know, I'm preserving this land and they didn't do anything on it. Now it's very, very stringent. You have auditors, you have third-party verifiers, everything that you need to do. Like heck, in the first year, it's 10,000 hectares. It's like, I don't know, 2-3 times Manhattan. I don't know. It's big. And we're measuring the small trees. So it is quite a hard thing in the beginning.
Cool. Thank you for that long explanation. That's helpful. Thanks.
No worries.
Tracy, would you like to ask your question?
Yes, thank you, Stephen. And thank you, Simon, for, what you've mentioned so far. And I get a better understanding based on what you're saying, but I have a question relating to the carbon credits. I've seen a few articles, reports that carbon credits do not work. And they're coming from, okay, so if you have a big polluter who is therefore buying the credits, but they're still polluting and still burning a fossil fuel or contributing to climate change, then the credits they're buying really does not zero out their impact in terms of climate change. But I'm listening to you and you're talking about the measurements and the auditing, and I can see that, some benefits, but I still want to hear from you your take on, those who are buying the credits and in the business you're in. And what I'm seeing with these reports is almost as though, it will change how we're moving into the future. in terms of the current attention on carbon credits, and if this is going to be something where like, okay, it has a negative feedback, it has a negative impact, so do we continue doing it? Is there benefits for those who are in this business like you are? So it's like twofold question. If you can answer, I would appreciate that.
Sure. I'd say the first part of it is, while you're not alone in questioning this, I'd say the first piece of this is like how fast everything is evolving. I sometimes forget that I'm inside the industry, so for me it's like a no-brainer. But I have to remind myself also, like, it was less than 2 years ago that I did a podcast explaining why I was against offsets. So just for you to get an idea, my whole idea was that it should be an inset instead of an offset. Inset is what happens within your value chain, right? So like, I don't know, a company that sources dairy products somewhere, then they buy credits from their farmers. So basically they basically create the change within their value chain, and that's how they reduce their emissions or their offset. So that's the first thing, which, to summarize, is how everything is changing is so it's big. And why is that? It's because, well, and this is basically where Ponterra is born, some of these projects have not been to the quality standards that we would have expected them to be. And I have to say as well that as much as this is in favor of what we're doing now, because we're seen as a very high quality project, we also need to remember that there's been people doing projects like this for decades, doing them very well, but they did them to the best of their abilities. Like, one of the questions was around philanthropic funding, and the reality is that most of them had very little funds to do tons of work, and they did a great job, but maybe not to be put under like a very big scrutiny afterwards. So if you are to compare the pollution of like a large corporate compared to what that project was claiming, and that project was claiming something higher than it was actually doing, it wasn't necessarily because they were really bad at heart. This normally is like people that devote their lives to this, an NGO, they do this for almost no pay at all. And if they thought that their impact would be 10 and it ended up being 6, and then everyone is against the industry, well, they still had an impact of 6, living on the front lines, helping a local community and restoring a natural ecosystem. So there is a lot of bad press that, in my opinion, is unjustified in terms of the quality of these projects. Now we need to aim for these projects to be 10 out of 10. And this is why we are building a company like this. So I used to be in investment banking. I know what my clients asked for before. We want to be to the same standard. So we're building financial models that just resemble those that you would have in like a normal company. We're building operations and professionalism within the organization, which is more like an infrastructure project, like building a large bridge, like building a renewable energy plant. So just professionalizing the industry as a whole will progressively move the narrative towards like, hey, these projects do have a lot of quality and they do have a lot of impact. The second part of, I don't know of the question, but the second part of what I want to say is like, how do I see these offsetters? Because the whole criticism is like, okay, yes, they're saving the planet here, but ruining it there. The reality is that the first thing that all of these emitters and the people that buy from people like us is the first thing they do is reduce their emissions. But then they acknowledge if you produce anything, you will have emissions. Like, yes, you can move into like clean energies, you can source your materials, whatever it is, eventually lower your footprint as much as possible. But if you're in producing or whatever it is that you do have a carbon footprint. And if you want to be net zero, there has to be a way to compensate it. One of them is through projects like ours. Otherwise, are artificial technologies like direct air capture. But there is a need to balance this. Otherwise, like literally, the atmosphere just has more and more CO2 every year. So there is a way to balance this. How effectively, economically, you fix the problem of people producing first is what is happening, which is increasing the carbon prices. So 10 years ago, you could buy a credit for 20 cents. If you can buy a credit for 20 cents and one credit is 1 ton of CO2, it will surely be cheaper to buy that credit than to reduce my emissions. If I'm selling a credit for $100, it is way cheaper to reduce your footprint first. And that's what we want to do. We want to sell at $100, not only because we, like, as a company, could make more profit, more impact into the area, whatever it is, because that's how you reach a balance where whatever the company you want to name, company X, they reduce up to their maximum because it costs them, say, $50 to reduce every ton. This means like changing their energy providers, changing their mechanisms, all of that. And then they still reach a point where you say, well, I still need to be net zero. I still want to have a zero impact. What do? I can offset this to different programs. So this is sort of like why, summarizing, the first part is I think that the narrative around it is unjustly criticized in a way. Also, just you tend to click more on an article that says scam carbon credits. Like it's human nature. Like I've spoken to the editors at The Guardian, the New York. I told skyscraper somewhere, judging the work of some people in Kenya, where you're like, dude, go down there and see the impact that they're actually creating. Yes, they had a problem and they measured the trees and there was a deviation on it, but these guys are literally measuring it with, I'm not kidding, this is like a measurement tape. We use this for some trees. Like it's very easy to criticize. And then the second part of it is the market is moving and we see this. So yeah, I think offsets are a very important piece to the equation eventually.
Simon, thank you so much. I mean, you've really helped. I was getting it before from what you were saying, but I really wanted to hear it from you. And I thank you because you've actually really answered my questions. And some of the questions I was having, trying to, I was starting to doubt, but I don't just doubt in terms of the carbon credits. I like to get that information. So I was looking into it in terms of other readings, but hearing from you, I can see the value. And one of the values you mentioned is the ecological value that they're often not even measuring. And that is extremely important. So again, thank you very much. Really appreciate it.
No, thank you. It was a very good question. So yeah.
Great. Thank you, Simon. I really appreciate also the going deeper into the greenwashing that's happening here on both sides, or I don't know if you would call it greenwashing, but sort of the need for this, and then also the gaps that there are in the market. We're running up towards the end of our time, and I would love to give you the opportunity to talk deeper about the financing model, because I know that there are other people in the room who have much deeper background in this and would appreciate hearing a bit more on how this works from a nuts and bolts sort of way, and where and I think the others in the room can benefit from this as well, as they're coming to understand the deal that can be done to set up projects like these.
Yeah. So spoiler, I did give you most of the financing elements by answering the questions. Again, I very recently learned that I learned through analogy. So I'm going to repeat the analogy to the real estate industry. This is literally like you're saying, I have a plan. I'm going to make that building, but I don't have the funds to do it right now. So what can I do? I can pre-sell some of the apartments and get the funding now at a discount. And this is the way that I build my building. This is effectively how part of our financing works. So we go out, we identify, we spend a bit of money upfront on our own balance sheet. You could say maybe it's like, let's just run a few numbers, but for what we did, we spent around 1 to 1.5 million developing this project. So basically what you do is you do a small pilot in a land, you start to understand what the planting design would be, what team you would need. So everything related to, like, as if you were the architect or the engineer for that building. So what am I going to do here? How am I going to build the team? How am I going to contract? All of that. With that pilot in mind, you can go out and seek that funding, which is, well, I can show you a bit of proof of what's been going on here. I will be building this project. It will be issuing credits throughout this crediting period. And then ideally what you get is some commitments to buy these credits in the future. So the two ways in which you can get this commitment is someone that says, yes, I'll buy that credit that is issued in 2030, but I will pay it to you at 2030. So basically you secure, you know that for sure that credit is sold if that company still exists, of course, but you don't get the money now. This is one way. So this is like an offtake agreement. The other one is just like saying, yes, I can buy that credit in 2030 and give you the money now, which is very beneficial for me because this is how I launch my operations. Obviously, the pricing depends. So I say, if you want to secure that credit now, but pay me in 2030, I can give you a price of X. If you pay me today, I can give you a huge discount, just like the apartment example. And that is that. The third way in which you could you reach an agreement is for someone that might want to broker your credits. So, but this is not necessarily like in terms of funding strategy, but actually like corporate strategy. What is it that I do? Is my strategy to be out there when the credits are issued and trying to get the best price? Well, as a developer, not really, because there's literally brokers for like, it's the one thing that is super developed, right? Like every big bank from like Goldman Sachs to commodity traders like Trafigura have their own carbon trading desks, right? And they would always get a better pricing. So the other thing I do with a project like this is maybe I leave a portion, which I keep. So I haven't pre-sold it to anyone, but I reach an agreement with someone saying, you have the right to sell these credits. If you sell it at 100, you give me 80. If you sell it at 200, you give me 160, whatever it is, you know? So you basically reach like a brokerage agreement. So yeah, in terms of funding, that's how it works on our level. Again, the actors that come into play in something like this is like the corporate that wants to retire the credits, or the financier that just wants to play on the increasing prices of the market. So hopefully that covers it.
Yeah, I think so. I wanted to give you the opportunity to just share a little bit more, and I like that you're stressing this analogy, right? Which is very helpful in my mind. It's one that I've heard before of how to explain it. If there aren't other questions from the group, maybe I could ask you to, or Leia has one, and then I'd ask something on carbon capture, the technology happening there, and your opinions versus nature solutions. But let's let Leia and Aaron go in first.
Thanks. Yeah, one quick one from me. So just, I think you mentioned the 1 to 1.5 million on developing the pilot. So just curious on the financing for that portion.
You can say it came from our balance sheet as a developer, so it comes like at risk. So it's like your return on investment. So like equity, basically. Aaron?
Yeah, thanks. My question is more about the carbon price curve, and like what factors do you see going forward will affect like or maybe like headwinds or tailwinds to affect the price of the carbon credits?
Yeah, I'd say there's one big one, which is like the regulatory environment. So if this turns into a regulated market, how that works, like if everyone is mandated to offset their emissions, then the carbon, well, I can just say that it will be a very impactful thing on one way or the other. Like on one way, it could be like, it would certainly increase the prices, but it could also cap the prices and just, you know, making it standardized, making very, very clear what is a carbon credit and what isn't, and then having a fairly, you know, set target for those prices. That would be the biggest factor. But I'm not an expert in like this part. It's just what I know from the buyers that we get. And like everyone expects the carbon pricing to increase, certainly. Yep. Last question, I think.
Yes, sorry for the end moment question. I just wanted to understand your views and how do you go about, and thank you so much for your time. But I wanted to understand how do you go about double accounting of within your carbon credits, and also what do you feel about carbon credits and a net positive future?
Interesting. So double accounting, I mean, it's not something that we take care of. This is effectively what the registry is for. So once a carbon credit is issued with the registry, you basically issue that credit. It has like a unique identifier, and then it can be retired or not. And then once it's retired, you can't double count it. Again, I feel like so many topics, I'm not the expert, but I'm not the expert on this one. So that's how it works. So.
Great, thank you, Simón. On the last thing, I'm curious to hear your thoughts on, how do you position your project as a nature-based solution versus many other investors focusing more on carbon capture, carbon storage?
Well, I think it's what we all need to, and I don't want to sound cliche here, but we all need to work together. So we're solving for a lot of aspects related to our planetary crisis as a whole, which one of the things is climate change, but there's other crises. So we work towards improving biodiversity, amongst other things. Direct air capture is solely focused on like the removal of the specific gas. For now, their technologies are extremely expensive, so it's like a totally different thing. The credit there is in the hundreds because it's very, very expensive to do. I think they're just complementary. So you need to do our projects regardless of. So there's degraded agricultural land in communities that can't live off their land everywhere in the world. There's elements related to food security. There's elements related to just protecting against climate change, certain regions of the world which are basically on the front lines, and that without these type of projects, they wouldn't go somewhere. Even if you put carbon as one of the pieces of the equation, you would still want to do this. So they're complementary. I'd love all of these solutions to still go forward, the technological solutions, the nature ones, just acknowledging that even if you were to create like a huge technological thing that was able to suck up all the carbon, all the excessive carbon in the atmosphere tomorrow, literally like this, you would still need to restore nature. Like in practical terms, like, because I never know what the number is, but it is like something between 50 to 60 crops left, which basically means 50 to 60 years of food left in the world, which, without being very pessimistic, but literally topsoil, like soil has been so much degraded that there's no nutrients left in the land, so you won't be able to have a carrot in 50 years. So yes, carbon is a piece, but unless you restore these lands, it's just you need to do them anyways. So it's complementary.
Yeah, absolutely. And I mean, I think that's one thing that drew me to wanting to have you share about Ponterra and share about your work and helping empower local farmers, working within this idea of biodiversity, which many other carbon projects have not focused on. They have been monoculture, which is what you said at the start. So there's many beautiful like additional benefits here that you've highlighted. Yeah, with that, I would love to thank you so much for your time. It's been a really informative, educative session for many people here on the call, and I'm glad to share this with the fellows afterwards. Simón, thank you so much for being here. Appreciate it a lot.
Thank you, guys. Thank you for the interest. Great questions, and let me know if I can do anything after this for you guys.
Cool. We'll be in touch.
Thanks
Bye,
so much.
everyone.
Bye.
Bye.
Thank you.